Morning traders, and this is your Dow Jones day trade setup for today. So we got the pullback yesterday, a little bit further than what I was expecting. So I was kind of expecting us to be back somewhere between there and there. So this is you can see there's the inside tails there, plus there's another inside tail there, and quite a few there. And we flew through both of those and basically went to the 200 EMA. Okay, and that's on the 3 hour. So those are the levels, and as I said yesterday, we drew the same levels in yesterday. We're looking for price to turn off one of them. It has, and you'll see now where the entry was on the lower time frames. I would ideally like to see a little bit of a sort of a tiny pullback and then another acceleration through, but at this stage what we need to pay attention to is the following. Okay, so we are in a channel, and by the looks of things, this channel is what we should be trading. So it's long off the bottom of the channel, short off the top of the channel for now. If we move down to the lower time frames, you'll see that we are testing the underside of the alligator at the moment. So yesterday we had this consolidation pattern, and consolidation patterns, which is also a double top, and you can see we got the 1 hour close below that, and that was your cue for a short with a stop on the top here. Okay, so at this stage, looking at the 1 hour, there's nothing really here at the moment. I think if we just use, well, let's just use this bottom one here. There is an inside tail that we could potentially touch and test, but what is brewing at the moment is looking very distinctly like there's two. There's one there and there's one here, but this is yet another consolidation pattern. Okay. Obviously, I'd like to see another bottom here, but one of the things that I did see on the 3 hour, which I didn't mention, is this divergence. Okay, you can see there's a low, low, lower low, higher low. Okay, so we've got divergence here, and at the same time, we've closed above the high of the diversion bar. Okay, so for me at this stage, I think wait for this consolidation to finish, because it does, as I said now, it does look a little bit like a wedge of sort, and a wedge of sort could give us a second move down, and we can just work that move into the picture here. So there is potential that we have a second move down, but if we do get another move down, I think the first thing to do is to challenge a previous low, which is going to line up with the bottom of the channel, which would give us a potential double bottom. And the second one would be all the way down at 26,560. And let's just check if there's anything. Let's do it on a higher time frame. Okay, there's a previous swing high there. Okay, so that does match up. And the other thing that we do have here, so let's just delete these. The last thing that we've got in place here, and that is very much on the 30-minute, is we have this double bottom here. Okay, so technically speaking, we have the, just use a block here. We've got this double bottom. Okay, you see down, up, up. And if I take that to the top, you can see it lines up at the top of the channel. Okay, so that's kind of the view at the moment, we are in the middle of the channel, so when we're in the middle of the channel like this with consolidation, never really a good idea to take any of these trades to the upside at the moment. Rather wait for the pullback and then get in. Okay, if we're trading pure Bill Williams on the 12 minutes, then we should be long at the moment with a break of this fractal and a stop below this fractal here. Okay, so that's kind of where we are at the moment, and you want to keep seeing this move to the upside. And the last thing I want to do is I just want to use that as a channel, and you can see there is a potential channel that could form, but it was a channel, and now we're sort of getting a double top here. Okay, so, and we're already stepping sort of below that channel at the moment. So at this stage, I think just wait and see. I do suspect we're going to come back down here, test the bottom of the channel, and then probably look for more entries again. I'm going to clean this up and just finish off in the daily. You can see still lots of confusion. We are channeling down after having a pretty strong move up. But there are buyers here. For some reason, there are buyers coming in at this level. So until that level is gone, this needs to break through the zone, come up and test it, and then that'll give you the change in direction. There is still merit to come down to test the breakout, the previous breakout from last month, because that was quite a significant breakout. Okay, so for now, it's to really be patient. We don't have any major levels. I mean, that's the current level that we're at the moment. So this is our line in the sand, which is 26723 or 26720. A daily close below that is going to bring us more downside, probably into this zone here. Okay, so that's my view at the moment. But I think the bigger channel is the one to trade, and this is looking like a bit of a wedge for another second move to the downside. So that's the next thing to watch for. Just watch this. Watch this trend here. The minute we break through that with a close, and I'll just do it like on a 12 or 15. As soon as we get a close, you can see we're really getting a close below it. I'll just tidy that up. Okay, it's not a significant close at the moment, but the minute we get any form of close below that, there's a possibility that we're going to get a move to the downside. This could also be seen as a flat top triangle, and we've broken through and we're coming to test. So, yeah, I think if you are trading for long side, look at a lower time frame and just keep your stops below at least 1 or 2 fractals behind price. So if you're going in long now, because we are above the alligator and we're testing the alligator and this breakout, then your stop is below this point and then below this point. Okay, here we go. That's it for me today. Hope it helps, and I'll catch you later. Cheers for now.